Welcome to Face to Face. Sassoon Holdings released its full year results this morning, and joining me now to discuss the numbers and also the outlook for the company is Roland Sassoon, the CEO of Sassoon. Roland, thanks very much for coming through. Roland, it was obviously a pretty tough year for yourselves. I think just about for every bank out there. Headline earnings were down 37% on a per share basis. Perhaps you could characterize a year for us and what was really behind the fall in earnings.
Yes, well, there was a contraction in business overall. And our clients, who are to a large extent entrepreneurs, certainly felt the effects of that contraction. And of course that then translated into the impact on ourselves. We are a very diversified yet small banking group. And we depend very much on critical mass. And as that, if we don't achieve the critical mass that we need, the impact is high because the fixed overhead is high.
Yeah, I know the last time that we spoke, it was after you decided to call off talks with Mercantile, and back then you mentioned that critical mass is an issue for you. Is there any way to acquire critical mass? Maybe, as you said, the merger with Mercantile is off the cards. It's not something you're going to be pursuing. But have you got any other options there open to you?
Well, first of all, we are seeing growth, and in fact you'll have noticed with our figures that in the last 6 months there was quite good growth, and I'm quite encouraged by that. But I think that our clients are starting to do a lot better. But we always do look at acquisitions, from time to time, and so we are at early stage discussions with 1 or 2 people. Nothing significant, and it wouldn't be a major deal like the Mercantile deal was. But yes, that is important for us to grow either by acquisition or organically, and we'd like to do both.
Roland, so you're saying that there is an uptick in conditions for your clients, but over the year as a whole, there was a jump in provisions for impaired loans.
Yes.
Although the actual, I think you said the non-performing loans as a percentage of the book actually improved. So what's behind the kind of the contradiction in those two numbers?
Well, in fact, our credit losses have improved a lot in the last 6 months. You will have noticed at the half-year time, we were at 2% annualized credit loss. We're now at 1.4%. So there's actually been quite a good improvement. And of course, that's also reflected in the NPLs, the non-performing loans. And
do you expect to see a further improvement into this new financial year?
If the economy continues to improve, which not everybody would agree with, but we think it will, then we should get back to the 1% level, hopefully by the end of next year.
So is that pretty the target that you're happy with, or that maybe is?
Well, our credit losses at 1.4% are very much in line with other banks. So it's very much in line.
Yeah. Roland, because you have, I suppose, maybe closer relationships with your clients than some of the bigger banks, can you give us an indication of which sectors of the economy are actually doing better, where entrepreneurs are faring better than others, or is it pretty much across the board that you're seeing an improvement?
I think it is across the board. I mean, we've seen that you can see statistically that, for example, the motor industry's improved quite a bit. But I think it is across the board. Most industries are definitely, there's definitely an improvement. As I say, it's still early days, it's still tentative. We're not sure if it will continue, but our feeling is that it will continue in talking to the various clients that we have.
So what are the risks out there in possibly setting us back? Would it have to be a shock from overseas, or do you think it could possibly?
Banks are certainly very, very aware of risks since the 2008 debacle, and there's a lot of emphasis is now on risk and stress testing and all that. So one looks at all types of risks. It's not based on historical data, based on looking out there. What are the kinds of things that could happen? Almost up to an Armageddon situation. Will there be another big insolvency? We don't think so. In a bank overseas, but you never know what's going to come around the corner. So we certainly very much more, and I think all banks throughout the world are very much more aware and conscious of risk and are taking all the right precautions.
Well, and on the issue of costs, they have also gone up, in fact, fairly significantly. Yes. So your efficiency ratio has deteriorated. It's now 70%, it was 63% this time last year. You do refer to the fact that you've moved head office and you've invested a lot in infrastructure. Are those the costs that you've absorbed going to pay off for Sassoon down the line?
Okay, so we believe they will. We have geared ourselves for growth. The growth didn't really come the way we would have liked to have come in this last year, but we think that the growth will come, and we've positioned ourselves for that. You know, being a very small bank is problematic because you don't get the critical mass. So it's all about getting that critical mass. We've geared ourselves for it. Of course, there's a lot of overhead attached to all the compliance. The compliance issues have escalated enormously in the last year and are continuing to escalate as Basel III, as it's loosely referred to, unfolds. So we're now doing stress testing and all kinds of things, and there's a huge cost attached to this. So that's one of the reasons for the costs. But the other is that we've built the platform for growth. We've got the computer systems, we've got the management team, we've got the premises, we've got it all. So now we just need to go out and get the business, and we, as I say, we are successful in that.
So that's a positive aspect to the cost, but just back to all the regulations and the fact that these obligations are now very onerous. Is this something that you can manage and handle, or is it something that you just have to handle?
No, we have to, and we will. We will. It's part of the game, and we will do it. In a way, there's a positive side to it. Of course, it's a huge barrier to entry for anybody wanting to be a bank, especially a small bank. And you know, if one does it well, it gives a company an advantage over the others. So you know, we are absolutely determined to do it well.
Okay. Roland, there's an interesting development, and that you refer to in your financial statements, that you've basically agreed to set up a private equity fund called Trinitas. Perhaps you can tell us a bit about that. It seems quite significant in that it's got I suppose, funding of 430 million rand, which is a fair amount of money.
Yes. It is significant. Well, it's not a significant investment for us at this stage. In fact, it's a startup. But we think it will be significant in time to come. And this is the move is significant because it's up until now, all our investment in private equity has been proprietary investment, which is not really encouraged in terms of the new regulations that are coming out. And that's really why we went for this. This is a managed fund. We have investors, big institutional investors, and we manage those investments. We also will invest in ourselves through seed capital, but the idea is to keep bringing in other parties and to reduce our investment over time, so that our involvement in private equity will be more on a managed basis than on a proprietary basis. Private equity is a very important business for us. We've done very well out of private equity. In fact, you'll see that Sassoon Capital has been perhaps the star performer. So it's a very important area. We determined to remain in it, but we've had to readjust ourselves in view of the regulations.
Okay. Unfortunately, we've run out of time, but I'll ask you about that next time we chat. Roland, thanks very much for joining us.
Pleasure.
That's Roland Sassoon, the CEO of Sassoon.